All right, guys, I'm here. I'm sorry. Listen, bro, my internet is at like 0.5% upload speed, like literally point 0.5, the worst upload speed I think I've ever seen right now. And so it's kind of iffy whether this stream is going to work. We'll see if it does. Let me know if it does. If it does, let me know. It should work okay. I think I've streamed here before where I'm at now, but but yeah, you can see I'm burnt right now. Let me get some music playing. But yeah, let me know if it works. It should work. Um, we'll see if it does. Let me get everything pulled up here. All right. Yeah, so we got an hour until jobless claims, unemployment filings come out. That's why I started late too, because if my internet is that bad, we're gonna keep we're gonna push it towards the end of it. Anyways, I don't know why Roblox is the chart I have up here, but we'll put it up. All right, we got. How's the market doing today? I haven't really looked at it. Here's the SPY. It looks like it's down. No, you know, oh, we're almost completely flat. I think the whole market's waiting for this report. To be honest, there's the Q. So we did dip yesterday, as I thought we would. I thought we would go down yesterday. It just makes sense. Like we get a bounce rebound day, and then in terms of like balance. Oh wait, I don't want that. In terms of just basic balance, like we're gonna come back down. The whole market looks very choppy today, though. Like very very choppy. Um, there's Nvidia on the right side. I got my monitor switched. Usually my monitor's on my left. Today it's on my right, which I don't mind actually. But yeah, Nvidia at under $100, $97. It's probably not helping the market very much. No. There's the Q. Here, let me get some music up here, chat. Just bear with me. I'm getting everything set up. We got jobless claims, unemployment filings. We're gonna put those up so you can see what they come out as. They are expected today at that's next week. This week. They're expected today at 240,000 jobless claims, 240K. So yeah. So yeah, last time they showed up at 249. So they're expected at 240,000 again. Last time 249K. This is a big report. Usually, usually, um, jobless claims is like a weekly unemployment filings report. So it's not the biggest report ever. But I think right now with the current market sentiment and just the condition of the market right now, I think it's important to there we go. Understand like right now is a very volatile part of the market. All right. So we got this banner up. Jobless claims drop are expected at 240. This helper hurt the market. I'll put a timer up, but higher jobless claims means more people filing for unemployment. Yeah, so jobless claims are how many people are filing for unemployment. It's an important time because of Nvidia's downfall. Nvidia giving all of it back, coming all the way back down to $100 a share from 140s was up a huge percentage. Will it be good enough if we get close? I mean, we'll see. You know, isn't that the same as unemployment numbers on Friday? No. So jobless claims are how many people are filing for unemployment week to week. Unemployment numbers the percentage. The percentage. I believe the unemployment rate. I think it's quarterly actually. Let me make sure. Yeah. So last week. Or no, so the unemployment rate's for July. So July unemployment rate was 4.3%. So the one Friday was monthly. Today's is weekly. Again, expected at 240. I got some good coffee. I'm excited for. But yeah, next week's a crazy busy week, man. Next week we got PPI Tuesday, budget data Monday, CPI Wednesday, jobless claims Thursday, Philly Fed Index Thursday, retail sales Thursday, consumer sentiment Friday, housing starts building permits, home builder index. Um, yeah, so next week is packed full of stuff. This number probably be bad, many earnings miss, and they try to cut jobs to keep margins. Hurricanes, yeah, until laying off 15,000. Are they really? GDP is still positive. It's 2.8. At least that's the initial estimate is 2.8%. So it's still pretty positive. I get like what happens is that people hear things are bad or people think things are bad, right? Doesn't necessarily mean we're in a recession, but like people that don't really understand economics will just kind of be like, yeah, we're in a recession. Even though like they're just trying to say things are bad and they don't really know how to say it besides, yo, we're in a recession. But we're not in a recession. GDP is growing, you know. Now you might think those numbers are wrong or whatever, but those are all we got to go off of. SPY is technically green, Q is technically green, Nvidia is slightly red. Still, Nvidia is at a pretty big support level. I'm watching it closely. Um, yeah, maybe we are headed there. I don't know. Yeah, we got jobless claims again next Thursday. Yeah, I got some good coffee with me. I'm excited for it. Like I gave up using a Keurig just because of the heated plastic aspect of it. Like I don't think heating up plastic and drinking it every morning is necessarily good for you. Uh, Regardless of how like good the plastic is or whatever. And so we gave those up a long time ago, and we just use a regular coffee pot now. But here we have a Keurig, and it just smells so good, man. Smells good. Today might be the start of a reversal of jobless claims boosting the market. Next week in September, rate cuts will boost us more. We are not in a recession or bear market. Yeah, I mean we're in a very bull market, growing GDP data. The real risk right now is spending and inflation. At least that has been the risk. It could pivot though. Like I've seen it start to pivot from fearing inflation and too much spending to fearing economic weakness. Uh, Specifically, once we had the Friday last week, we had that job report drop that showed unemployment at 4.3. Non-farm data much less than expected, way lower than expected percentage wise, and so your payrolls wise. So don't worry, they changed. Yeah, I mean, my problem is that you'll hear people and they'll be like, "Yeah, they changed the definition," and it's like, "Oh, now you're going by the definition, huh?" Like they're yelling we're in a recession right now, but when I tell them we're not fitting the technical definition of a recession, they say, "Oh, you don't know what you're talking about, bro." And then they're the first ones to reference years ago we technically hit a recession by the technical definition. It's like, all right, well, you're just picking and choosing then, you know, to fit your bias, and that's okay. That's how a lot of people are. They go with their bias, they go with their political stuff. Like I'm just against it. I don't think it's good trading to do that. It's too easy to get wrapped up in like sensationalism, drama. How many people stream Jobless? 800 today. I think we'll have over 1,000 personally, but maybe I don't know. Claims will continue to go up for another 12 months or so. Layoffs are still continuing, and claims can be made until severance packages run out, which are typically 6 to 12 months. Yeah, is it really Raven? I don't really eat there, but is it really $15 a cup? If we saw great earnings, I could see companies continue to hire. Numbers surprising, but earnings were very mixed. Yeah, and the reactions to earnings weren't great either. We don't need a recession to continue to see downward trends. It's risk of recession that will move markets. Yeah, for sure. I mean, I think a correction was necessary, though. I talked about this the last few days. We're never going to hold those gains that we put in. Like Nvidia going up as much as it has, and the S&P doing 24% last year, and then another like 20% or whatever it was this year. Those type of short-term gains, and it is short-term over the last few years, were never ever going to hold. They were just never going to hold. They were going to correct. And this is what I kept telling people, like, a correction's healthy. It doesn't mean it's the end of the world. It needs to happen to a certain extent. Now, sure, you're going to have everybody preaching doom, gloom, and crashes because that's how they get clicks. And I get it. I got a lot of, we had like 1,000 people here on Monday with no economic reports. So, like, people were tuning in whenever they thought the market would crash, right? But again, I don't know. I hope not. At least anything could ultimately happen, and we could crash. We certainly could, but we also might not, and we also might just rebound and go back to normal movement. Take a little while to retrace back up to where we were, and everything's fine. We'll see. We'll see. Jobless claims plays a big part to that, I think, today. And then next week specifically, we have CPI inflation data coming out. So CPI is not the Fed's preferred inflation metric, but it's the most watched metric, right? So the most people watch CPI. We get thousands and thousands of people show up for CPI. Retail traders watch it, Forex traders watch it. Everybody watches CPI data because it's just a massively influential economic metric. So, yeah, we're going to watch it next Wednesday, I believe. We also have PPI, which is the other side of that, on Tuesday. So they're doing PPI first, which is weird. Usually it's CPI and then PPI. They're both gauging inflation. One of them gauges business, like wholesale inflation, and PPI. The other one measures consumer inflation, how much prices have gone up and down for consumers in terms of spending. So, yeah. Do we have earnings today? All right. We got SoundHound earnings this evening. Yeah, we got Eli Lilly, Datadog, Plug Power, Kronos, Group, Krispy Kreme. Nothing else big though. Palantir. Did Palantir have earnings one of these days? Yeah, Palantir's gapping up something. Let me see if I can find the news. Mm, coffee's good. All right. Oh, can you not hear the music? Sorry, I've been rocking out to music all morning. Yeah, let me start this over then. All right, so Palantir is going to deploy AI products on Microsoft Azure for gov agencies. I mean, CPI is always important. Um, it might not be the most important thing. This is Keurig coffee. It's good. I like it. I don't have one at home. Like I said, we got rid of ours. But SPY's starting to bounce back a little bit, but everything's very choppy, very flat leading into this report. We got like 45 minutes plus until this report drops. People cutting back spending and retailers are doing discounts. CPI will probably down number, but I don't think growth is what people are concerned about if Fed waited too long. Why did you get rid of it? Did you need the money? No. Again, I don't think heating up hot plastic every morning and then drinking that for your coffee is smart. Um, but I love the machine. Like, it was super convenient. Money has nothing to do with it. I just don't like heating up hot plastic in the morning and then drinking it. What's up, Scoobs? Gold is up. Is it really? Yeah, Palantir bouncing back up on government agency deal. Gold fighting its way back up. Still pretty green over there on the year overall. Like if we look at a yearly chart for gold, here's where the year started. Gold was at 2,000. Start of the year. It's now at 2,500. It's up 25% on the year. So gold's been doing really well this year. Let's see if that trend continues. You were right about yesterday. Told us to be careful yesterday and saw a reversal. Yeah, big red market too. Balance is such a huge factor. Like balance is powerful if you start to watch for it. Watch for balance. What I mean by balance is like if the market goes down really, really big and then bounces back up a large percentage of that dip, what's the logical next step in that pattern, right? Like IQ tests. When they look at IQ tests, what do they look at? They look at pattern recognition. A lot of them. A lot of IQ tests focus on pattern recognition. And because that's a really good gauge of like smarts, right? But even with that, like, okay, you go down really big, you bounce back a big percentage. What's the next step? Next step is for you to go back down some, and that's what we did yesterday. We went back down some, and that's mass psychology. Like that's what people think about, and that's where their bias is most of the time. So you're trying to figure out what other people's biases are. Whatever. Logically speaking, if there's unemployment claims, the government has to. Yeah, I mean, no, I guess you could look at it that way, and that might be a small like nuance of it, TC. But the reality is, the less people that work, the less people that generally spend and get lending, and so it slows the economy down some for sure. Super micro. I know they had earnings and they were down big. I almost bought the dip. Glad I didn't. Percentage wise, they just did too much. They just did too much. But look at that percentage drop for super micro, man. They're down huge. They dropped from freaking 1220s all the way down to 490s here. Wow. Ten to one split for super micro. I think that'll probably be a good move. I think they need to allow people to get in cheap because the reason I didn't buy it, I was going to buy the dip. The reason I didn't buy it is because it's expensive, and for me to buy any reasonable shares, like I'm going to be risking a huge amount. All right, guys, we got 45 minutes until this report drops. So Ken. One split after Ford earnings. I bought the dip at 1120. It's called a falling knife. Do you think it'll recover? Where's Ford at now? I'm in Ford also. I just haven't looked at it. Ooh, it's down nines. Yeah, I mean, I think all of these are going to recover. Just how long that it's going to be, we don't know. Not all of them. Super micro, I don't know. I hope so, but we'll see. But Ford, company like legacy companies like Ford, sure, it's going to recover eventually. I don't know for sure. Not an investment professional. Don't copy me. I might be wrong. Maybe it crashes and goes out of business. I really don't know, but I would assume it does. At least I'm assuming it does. No timer. I'm on my laptop, so the timer is less cool for this one. I'll put a timer up, but it's not as nice. I guess I can. Like I can put one up. It's not as good of a timer. Yeah, I don't know where the timer went. Yeah, this timer sucks. Yeah, like, look, the timer won't even come back from behind the thing. It's staying right here. I don't know how to get it. I wish I could get it to stay in front. Um, I think the way I did it last time was something like this. I'd have this up. I'd do something like this. Put the timer way up here. And then, like, and then put like a small little chart up there at the bottom. Or something. Think about playing forward. Yeah. There we go. All right. So we'll get this timer up. What do we got? We got 39 and like a half. Yeah. There we go. Here's the timer. Chat. We'll put up something here. So what else do you want up here, guys? So we got forward. I'll put like Nvidia's chart like on the bottom here. What the heck? There we go. Maybe I should put up like gold or something. Yeah. There's Nvidia. We'll keep Nvidia just chilling right here. There's your timer, guys. All right. Yeah, I remember Beyond Meat. I've been talking about Beyond Meat's failing for years, and I still think it's going to. I just don't think, I don't think, I don't think anybody wants to buy it. I think they spend a lot of money on something that not that many people want, and now the business is failing as it probably was going to the whole time. Yeah, Eli Lilly going crazy. Robinhood. How did Robinhood do for their earnings? I know they had earnings like yesterday, right? Gapped up a little bit. Not a huge gap up though. Down day yesterday for them too, but they're up some. Tesla, where's Tesla? Tesla under 200s at 191s. Yep. I'd spy at 519s. Neutral job report is probably best today. Will be bullish. Hey John, how are you pumped for this report coming in? I'm kind of pumped. Honestly, though, guys, look, I would love to be like, yeah, oh yeah, I'm the most pumped ever. But I cover these reports every week. Now, I think this is an especially important report, based off of Friday's job report, based off of the yen. At I'm going to call it the yen crash. The yen didn't crash, but the yen caused the U.S. market to crash in a specific way. Again, what happened was that people used the yen for cheap leverage to buy U.S. assets. Whenever the Bank of Japan, the Japanese yen, whenever the Bank of Japan became really hawkish, rate hike. I think they backpedaled on their rate hike, but they did a rate hike, or they said they were going to do a rate hike. They said they were going to get really hawkish. People started fearing less favorable terms for leverage using the yen. And so they started selling off what they were buying with the yen, which was U.S. assets, and that ultimately caused the market to dump back down some. Yeah. Oh yeah. I can't do it really well. Rest in peace to the man. I was like a wrestling fan when I was in like 5th grade. You know, I'm not judging you if you're still one. I mean, I was into it. I get the nostalgia aspect of it. Like I was into it. I was into wrestling whenever like Sting was at his like dark, like mysterious Sting, like dark Sting with like I think it was like WWF, WCW, the NWO, New World Order, and like all this stuff. I was into wrestling then. We had like Booker T and like all those guys. And then after like 5th grade, you know, Stone Cold Steve Austin came out like somewhere after 5th grade, and I was kind of into it then too, but you know, my interest started to drain a little bit. Started becoming interested in girls, like you know, that's how it goes, I think. Stop watching wrestling as much. Yeah, yeah, that was my generation of wrestling. I even went to like I even went and saw one. What got me into it was that they used to have those pay-per-views. We used to go to the video store. Like me and my friend Michael used to go to the video store and we would rent like all these pay-per-views that they had available, you know. And like I think deep down we knew it wasn't real, but we still watched it and we still like acted like it was because we got hyped up. That eventually led me to watching like MMA and UFC and like training a little bit. And so, you know, I should have known. I was also into the Karate Kid a lot as a kid. Like the Karate Kid was like my trilogy. The Karate Kid was good before Cobra Kai. You know, yeah. All right, guys. Spy at 519s. Q is sideways. Tesla's down. Nvidia's down. Nvidia, the $100 level is still incredibly important. I've been saying this every day, but it's really important. $100 for Nvidia is the level you want to watch. You want to pay attention to $100. It's super important. Three Ninjas, bro. Three Ninjas was the movie. Honestly, though, I can't even lie. I think my son might be just a tad bit too old for it. My son's 10, right? And I remember absolutely loving the Three Ninjas movie, all of them, right? You had Tum Tum, you had freaking Colt, and I can't remember what the other guy's name was. You had like a clone of the Karate Kid grandfather. You know, it was cheesy, terrible, but just so good. You know what I mean? And we watched it. I loved it as a kid. We watched it with my 10-year-old son. My 10-year-old son's just like, Dad, what is this, bro? I don't like this. It's dumb. Turn this off. You know? And it hurt a little bit inside. My son not liking it. But I think I waited. I think if I would have showed my son those movies when he was like 6, he would have been into it. Right? I waited until he was 10. And 10-year-olds, they don't want to look like babies. Like they don't want to look young. They want to be grown. They're like, hey, I can do this. I can tie my own shoe. I can wipe my own face. You don't need to do all this stuff to me anymore. So yeah. If once my son registered that it was a kid's movie, he's like, I'm not interested in this. You know, this is too kiddie for me. That's how it goes. Will this help the market? Yes. Three Ninjas definitely helps the market. But the market honestly is not doing anything. Look at it. It's completely sideways. There's nothing going on. Everything's sideways. Nvidia's gapping down. Palantir's gapping up on government deal. They did a deal with the government for something. They're gapping up a little bit. Everything else is perfectly sideways. You know, you can see the light blue line right here. That's the previous closing price. That's the completely 50 level, the neutral level. We're right there. Same thing with the Q. Tesla is slightly under it, but sideways. Let me see Nvidia. Nvidia is about the same. So, are we expecting lower prices? Well, today's jobless claims, like unemployment filings, is what today's report is. This is how many people are actually filing for unemployment, week to week, right? So they're expecting 240K. Last time it showed up at 249,000. I'll tell you this. This is almost certainly the way the market's going to react either way, or the way the market's going to react to this. If jobless claims, and I don't know what they're going to show up as, but if jobless claims show up way higher than 240, the market's coming down, I think. I might be wrong. Maybe it rips up. I don't know. But I think over 240 will be a much less optimistic sign. You know, if we come in at 250, 260, like anything over that, that's definitely right now, I think, a bad sign. Everybody fears the economy right now. Economic weakness, I should say. It's pivoted over the last few weeks. And so with that fear, they're going to be watching jobless claims. And if jobless claims comes in weak, people are going to panic, I think. Now, if they come in low, that's an optimistic thing for the economy. That's like maybe we get a nice bounce. I'm not sure. But I definitely don't want them to come in higher than expected. But it's a weekly report. Anything can happen. What do you guys think it's going to do? Higher or lower? $240 is what's expected. So a good low would be like 215, 220. Yeah. Too low or high will lower it. Yeah, maybe. Lower. Yeah, maybe. Gonna fluff the number, maybe. Higher. All right, chat. What are you guys thinking? All right, we got 500 plus people here already. Let's do this. We got 30 minutes, chat. 30 minutes before the data comes out. Let me know in chat right now. Higher or lower jobless claims numbers? I can do a poll real quick as well. Should I? Honestly, I don't even want to talk about this because I don't want to put it out there. But I've got the lowest upload speed of any I've ever seen. It literally said my upload speed was like 0.5. That's like the lowest upload speed I've had in years. How do you even have a 0.5 upload speed in modern day? You know, to put it into perspective, what most people have is somewhere between 500 and 1,000, right? Sometimes they have like 250, 200. Anything over 30 is fine. 0.5 is bad, but my internet, my stream's running flawlessly right now. It's running great. There's no problems with it. So the download speed's fine. Download speed's like 200. So how do you have that discrepancy as well? I'm not sure. Freaking internet. Market's not going anywhere until after Jackson Hole. Yeah, Jackson Hole later this month. The other big thing that a lot of people don't remember, Nvidia earnings come out at the end of this month in a couple weeks. Nvidia earnings in a couple weeks are going to be crazy, crazy, crazy. This is going to be the end all be all of reports this year. Is this Nvidia earnings report? If Nvidia comes in weak for earnings, chaos can ensue. We got to be careful. That's the thing I'm the most nervous about, to be honest. I'm happy. The last Nvidia earnings, we had over 10,000 concurrent viewers. The time before that was our largest stream ever. We had close to 100,000 views total, and we had like 14,000 concurrent watchers for Nvidia earnings. So it's our largest stream ever. So I'm excited for it in that regard, but I'm nervous for it as well because the market's in a fragile spot right now. It's in a fragile spot. I would be very careful. I'd be very careful. If Nvidia comes in worse than expected, and guidance especially, if they put in good guidance, great. If they put in bad guidance, again, the whole market's weighted to Nvidia right now. There's a lot of risks for it. And then Jackson Hole Symposium, Economic Symposium with Powell, I think comes out on the 22nd. Obviously, we're going to stream that live like we always do. We'll have thousands there for that as well. And that'll influence the market also, hopefully in a positive way. I think Powell's going to be dovish right now, though. I think Powell's going to be less restrictive. He's going to want to push for low interest rates because we're seeing signs of economic weakness. And so I think he's going to cut in September. I don't know if they're going to do the emergency cut next week that they've been talking about. I don't necessarily think we should. Even the SOM recession indicator, we didn't quite hit it. We were like 1 or 0.5 under what we needed to hit for the SOM, recession indicator to really hit and signal a recession. So we haven't actually seen that happen yet. The discrepancy is 0.5. So you see a 0.5% increase in unemployment, SOM signal activates basically. And again, it's not a perfect science either. It's not perfectly accurate either. Like there's times where it's happened and we don't hit a recession and we're fine. And so anything could happen, I guess. But I think Powell is going to understand the risks of rising unemployment and lowering payrolls. And he is going to pivot towards a more cut-friendly stance by the Fed. I'm nervous because SPY and P move the same. If they're going to do that, it's going to be a huge downside. Chaos may ensue. It might. Market hasn't started yet. I mean, fine started. Yeah. I miss my Keurig machine. It's funny. I didn't drink coffee my whole life. I didn't drink coffee. And I got up early for work every day. Never drank coffee, not once. And that's a lie. I drank coffee. But honestly, I never noticed coffee. So I didn't start drinking coffee until I was like 30. Now I love coffee. I can't, I don't know why. I remember living in Canada and getting up and drinking coffee and just not even feeling the coffee. When will you trade, John? After this report, probably. Yeah, so we're going to trade today. But again, we're going to wait and react to the report. I mean, I could short some stuff. Let me see. I'll short the Q. See if we can come back down in an easy range. See, I wanted to short it, and I just missed this downward move, right? Remember, you guys saw that? Like, I wanted to short this, but I just slightly missed the downward pressure. It's all good. All right, we got 150 shares of the Q short. Trying to write it down. We got the previous closing price underneath this. I just want to see if we range bound trade into this report. Nvidia is at $99 even. Yeah, reports in 21 minutes. 7:30 is Central Time, right? So I'm in Central Time. The report comes out at 7:30 my time, so in 21 minutes. I thought about stop drinking coffee, but I love it too much. It feels good to drink coffee and get up in the morning. I'm a morning person by nature anyway, though. So like Carol is not a morning person at all. Carol hates mornings. Very hard to wake up. Is moody and grumpy when she first wakes up. I'm the opposite. I get up in the morning. I'm joking, dancing around, like having fun with my family. My daughter's like my wife, but they both hate me in the mornings because I'm all cheery and they're all gloomy. And yeah, I guess it works out me getting for this stream. I have to get up at like what 5:30 a.m. So I guess it works out. I'll add a little bit to this trade. Some risk so I can get filled. We got 200 shares of the queue. Got a couple minutes. 200 EMA is so far above us that I could take a $100 risk or whatever. Maybe. How do you nonchalantly short and put it 150 shares at the queue? I mean, I don't know. It's pre-market. We're just playing around. I mean, I know it's a large position, but the risk is pretty small, actually. You know, so like this position, bro. What is up with this? Okay. Like my computer won't put anything in front of toss, but my risk is pretty small. You know, and my account's 6 figures. Like we've got, almost 500,000 in buying power. I'm not sure exactly how much. Which, again, I'm not bragging. I'm just explaining since somebody's asking me how I'm doing this. Yeah, I mean it's a $90,000 position, but my risk is much less than that. You know, so my risk isn't 90K. And so my risk might be like 50 to 100 bucks. I would say. I'll cut it before it gets over that. All right, guys, we got 20 minutes. 20 minutes. Like, how do you manage those emotions? The amount of money I'm winning or losing is very insignificant relative to my risk tolerance. And this is an important lesson. So if you're going to day trade, you better be okay with what you're risking, right? Like I could lose the max here and be fine. And be fine and not be upset, not even think about it for the rest of the day, right? Other people might get upset if they lose the max, we're going to try to cover if we can get filled. And so, but this is a small, tiny little trade. Again, we got our little order here. Let's see if we get filled. Yeah. And I hope we break down and make money here. And my idea is to go to this previous close right here. If we chop around towards the previous close, great. I can make a little bit. If not, it's all good. But it's an important lesson, guys. Like trade with what you're okay with losing, regardless. And that's going to depend on the person. Like some people are going to be okay with losing 50 to 100 bucks. Some people are going to be okay with losing 500 to 1,000. If you're going to be okay with losing 500 to 1,000, you need to have $1 million plus in your account. Realistically, if you try to make $500 to $1,000 a day with an account less than, like, I would say $1 million, you're going to lose your account eventually, trying to look cool in the stock market. And I know that's not a popular, thing. I know that's not a popular mindset, but it's true. The amount of money you need to make $500 or $1,000 a day in an actual account, it needs to be deep 6 figures or more, right? Percentage wise, if you analyze percentages, like per trade percentages, it needs to be much more than, a lot of people try to make that much on like a $25,000, $30,000 account. That's a ridiculous thing. Like you're going to lose your account eventually. It's kind of like you might get lucky, but in blackjack, right? In blackjack, you need 100 buy-ins, 100 buy-ins. So if you go broke, you'll be fine. If you go broke any individual hand, you'll be fine. Trading is very much the same way. Like you need a big bankroll if you're going to take large risks. The big mistake most people do is that they take big risks and they don't have a big bankroll because they're trying to look cool on the internet. The internet's got all this marketing, like, yeah, guys, get rich trading, and it's like, those people are just going to lose money. And so, and variance is real, right? Anybody that understands poker should understand this truth, which is that variance is a real thing, and especially in trading and poker. You might have pocket aces and lose to 4 or 5 offsuit. Like variance is real. You could do the right thing. You could do the right thing in trading and still lose massively. Um, and so if you don't have a large enough account to counter that variance, you're just gambling. Like that's the reality of it. You're just gambling. You're just trying to look cool. Or maybe you really want to make money or you're addicted to the rush or whatever it is. But make sure you have enough account to take risks that you're taking. All right. Well, we're back to green here. Yeah. Yeah, we've been flat in this trade. We got 15 minutes left. I'm trying to see if we chop around, but it's taking too long. We cut a little bit of it just to protect the trade because we can. There we go. All right, we're gonna let the last little 50 shares ride. We're just the reason I'm taking a lot of this off is because we're getting kind of close to the jobless claims report. So this will be less risk. We're kind of flat now. We can just let that ride. Uh, yeah, that's a bad idea. Yoda using grit money. Jobless claims are a weekly report. Does it really affect the market like that? Certainly not as PCE, CPI, PPI. Yeah, 100% AZ. It's not going to affect the market like that at all. Now it might today. Today's different. It's a different nuance today. We got the implications of the flash crash we had Monday. We got the implications of a lot of stuff's going down in the market this week, and so people are going to be more weighted to this data today relative to normal. But it's still not a huge it's still a not like we're break even on this trade. I don't know what I'm gonna do with it. It's still not a huge report that is gonna drive the market like FOMC or like CPI or PCE data or like payroll data or anything like that. No, it's just a weekly report, right? But this weekly report is more important today than normal. Like generally speaking, it's weak, uh, pun intended, in terms of reactions. But today's a little bit more important, I guess. Is the point. How's going to be watching these numbers today? I mean, you don't have to trade with 1%. I mean, you can trade with more than 1%, I would say, Robert. I wouldn't risk more than 1%, but everybody's different. I think you're not going to be able to make 1% a day even, really, but I think a lot of people try to you hear these people that generally have no idea what they're talking about, and they'll say you can make 5% a day, guys. If you just make 5% a day, if you just make 2% every day, guys, in 5 years you'll have X amount. It's like, yeah, but nobody's gonna make 2% every day. Like we literally dropped a couple percent on Monday and Tuesday, and everybody thought the market was crashing. Now imagine trying to gain that percentage wise every day. Like it's just a ridiculous thought process from people who it sounds smart in their head, but they don't have enough knowledge about the market to understand how ridiculous it is to say that. Like 2-3% a day, you're never gonna make that consistently. The elite traders make 30%. Oh, a year annually. Um, and 30% compounded annually is powerful, but you're not going to make that much. And if you are that good enough, I'm not saying there's no day traders that can do it. The ones that can are not sitting at home on their laptops. They're sitting at a freaking hedge fund somewhere or at a bank, really, and they're doing it that way, and they're probably getting paid millions or tens of millions of dollars a year, maybe more. So they're definitely not going to be on YouTube making dumb videos about doing it, regardless of what anybody says. People a lot smarter than us with more resources, and they can't do it. Yeah, for sure, 100%. All right, guys, 11 minutes. 11 minutes. Yeah, we're flat here. I mean, we got out when we should have, but it would have been a big loss. So we managed the trade well. Not a big loss. Like, it would have been a little bit. All right, Nvidia falling down. I thought this might help us though. Nvidia is dumping down at 98s. Y'all think unemployment is going to be higher? I don't know. Yeah, no, they're trading $1 billion like plus accounts if they're working for big banks. Like they're trading lots. Um, maybe not billions, but they're trading huge accounts. So 30% is like millions and millions of dollars. All right, guys, we got 10 minutes left. We got 830 people here already. All right, guys. If you were entering the market now to invest, not trade, would you DCA or just smash buy? I guess it depends on what happens. Right. Personally, I'm going to preface this with not an investment professional. I'm not liable. If you lose, you always got to make your own assessment, trade responsibly. Not an investment professional. Don't copy me. With that said, if it was me, I would probably buy originally and then wait. If we bounce back, I'd stop buying. I'd just let it roll. If we continue to fall, I would average into it maybe a little bit more, you know? And I'm going to take an initial starting position that allows me to do that is probably what I would do. But again, I might be wrong. That might not work. Not an investment professional. Don't copy me. I'm not even claiming to be a good trader. Don't copy me. What do you think about ISM and S&P PMI impact? I think it was influential for sure last week. All right, guys. How many times do you have to say that in a stream legally? I don't have to say it at all. I think it's implied that I'm not liable, really. But I put it up anyway, and I say that, and I put it on the bottom just so protect yourself. That's what smart people do, right? Like you see a lot of people get in trouble, and like I think it would make anybody look bad if they tried to get me in trouble because I am one of the only people out here telling you. I'm not even claiming to be a good trader. I don't sell a course. I don't give out stock picks. And I just tell people every day, multiple times a day, that I'm not an investor professional and I'm not liable and you got to do your own thing. And I have no idea what's going to happen. And I might be wrong about any type of analysis I do. And I'd rather just run it that way and be honest. But it's also like sarcastic a lot of the time. Like half the time I'm sarcastic and I'm just kind of trolling because it's become kind of a running joke of my live stream that like, don't sue me, bro. You know? And so yeah, it's just kind of become a running joke of like we're just joking around, you know, trolling a little bit. But with that said, still not an investment professional. I'm not liable if you lose. You know, be smart. You know, people get really emotional and they try to blame whomever they can for their losses. You know, and so I just try to make it explicitly clear. I'm not an investment professional. I'm not liable. My channel's called Beginner Trading. So if you're copying somebody like that anyway, I mean, it's your own fault. Anyways, Nvidia started to break down. I'm still in this trade. We're doing a little bit better, but it's taking too long. I'll let it roll. Definitely going to cut it before jobless claims come out, though. Definitely top 3 worst ever in the world. Definitely top 3 best ever also simultaneously, I think. No, remind me tomorrow, bro. Bro, they really want me to update. All right. There we go. going to take this opportunity to cut it here and take my little $20 bill and wait for the jobless claims report to come out. Yeah, I'm just going to hang out here and wait. We were correct about our thesis, though. We thought the Q would come back down to the previous closing price, and we did, and that's great. Small little gain, though. We could have held the bigger position, but again, Nvidia's starting to flush down. That did drag the market down like I thought we would, and especially heading into this report, it's especially important, guys. So y'all just be careful. Nvidia's starting to break down. So everything's looking very, very red today. Or not very, very red. The SPY is actually completely flat. So is the Q. But Nvidia is looking very, very red. It's all the way down to 97.60s. All right, guys. We have over 1,000 here. A couple minutes left. Yeah, we got over 1K here. Let me throw this bad boy in sub-only mode. We're going to put it in sub-only mode, guys. So if you haven't already subscribed, hit the notification bell. We appreciate it. Jobless claims numbers drop in 5 minutes. 5 minutes. Be ready. All right, again, Nvidia breaking down ahead of this report. Yeah, I saw Robinhood gapping up a little bit. And again, if you haven't already, check out Apex. Apex is a funded account program in futures. They give you a demo. They test your skill. You can do exactly what I did on the NASDAQ today. In futures, no PDT rule. You don't need as much of an account. And Apex funds traders, they're one of the most legit. They've paid out hundreds of millions of dollars since 2022. Regardless of what anybody says, you know, they're one of the most legit. And again, if you want to check them out, they give you a demo and they test your skill. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one is $30 if you use my link right now. I think most day traders lose. I think if you try to put up 5K of your own money day trading, you're probably going to lose that as well. This is a much cheaper way to get started. The base one is $30 if you use my coupon code BT. Beginner trading BT, 2 letters, and you'll get it for $30. They'll give you a 25K demo. If you make 1,500 without losing 1,500 and following their rules, they fund you 25K with a 90% split. You could also get the 150, 250, and 300K packages for roughly the same price. Maybe I think it's like $35 instead or something like that. Maybe $40. But yeah, same thing. And again, this also comes with real-time data. If you were going to pay for real-time data yourself, it's going to cost about the same price, about $30. So the value is there, regardless of what anybody says. And it's just a great way to learn day trading. You're still probably going to lose because most day traders do lose. A lot cheaper to lose here, though. But they are a sponsor. They pay me money. I'm biased because they pay me money. And if they paid you money, you'd be biased too. Confirm all the stuff with them. I can't confirm anything. Check it out. There's the link. Use coupon code BT. Anyways. PDT rule is the pattern day trading rule. If you don't have more than 25K in a margin account in a stock platform, you can't day trade more than 3 times a week. You can get into 3 trades a week, round trips. That's a horrible idea. It makes traders lose more money. Imagine not being able to day trade and having to risk tens of thousands of dollars just to be able to day trade. You know, like it's the dumbest rule like you could ever imagine. Anyways, we got 2 minutes, chat. Let's get ready. All right, guys. Here we go. Again, 240K is what's expected, guys. Some people have it at 241. 240K is what's expected. Some have it at 241. Again, hit the subscribe button. We cover this live every single weekday right here. About 2.5 minutes. Nvidia did bounce back a little bit, chat. We were very correct in our thesis, though. We thought Q would come back down into the previous close. We did exactly that. Nvidia is starting to bounce back. It's over 98s. 1 minute left. All right, I think higher jobless claims means more people are filing for unemployment. So higher jobless claims means higher unemployment. And I think that's bad right now in this current market landscape. I think most people fear that right now. You can trade futures before the open. If you go to that Apex link. All right, guys, here we go. Really, we got about a minute left. About 1 minute, about a minute and a half. So this timer's a little bit early, but that's okay. Be ready, guys. All right, guys, we got 1 minute left. This timer's a little bit early, so I'm just going to pause this timer. We got a minute left. All right. Put Nvidia up on the chart too, I guess. All right, guys, 1 minute. Really, it's a little bit less than that. We really have about 30 seconds left. Hit the live button next to the play button. Make sure you're fully caught up on stream. We got 30 seconds, chat. 30 seconds. This is a super important report today. Hit the live button next to the play button. Make sure you're super caught up on stream. The clock was too early. So we got 15 seconds. 15 seconds. All right, we got about 10 seconds left, chat. 10 seconds. 5, 4, 3, 2, 1. Here's the report. Waiting for it, guys. Waiting for it. Expected at 240. The Q was actually up a little bit. Jobless claims 233, lower than expected jobless claims numbers. 233 versus 241 expected. Much lower than expected jobless claims numbers. And look at the influence of jobless claims today. It's popping the market up. Nvidia up to $99 a share. Tesla at 192, 193s. The SPY is flying back up. This is definitely helping the market right now on this jobless claims report. Again, it came in at 233 versus 241 expected. 233 versus 241 expected. That's a great report. That's a great report. We needed it. Better than expected. Again, 233. We'll put this up on screen. It needed this. The market needed this right now, guys. With all the craziness, massive volatility. We got almost 2,000 people here. And yeah, jobless claims again. Look. This was their report today. Again, it needed this report. 233. Lower than expected unemployment. Yeah. Good news. Market's up. Nvidia back over the previous closing price, trying to go towards 100. The NASDAQ is all the way at 439s. Tesla all the way back up to 193s. The SPY up to 520s. Watch Nvidia, though. Nvidia's fighting back, coming back up to 100. Let's see if it holds. This is good. We needed this, chat. We really did. We needed this. This report can help the market. All right. Again, the SPY down to 520s. The Q at 438s. Again, Tesla at 193s. We needed this. The market's flying back. I'm just watching this green action, guys. Drinking my coffee. Yeah, market needed this for sure. Yeah, sometimes the first move is the wrong move, guys. That's possible here too. Sometimes the first move is the wrong move. This is a big move up though, and so we'll see if we retrace. I hope not, but it's possible. So just sit tight. See what happens. Q's up big. It's just a big move. Like here's a 1 minute chart on the Q. It's just a big move. Nvidia's up some. Good for the market, man. It kind of needed this. Whew. All right. Did I do a poll? I don't think I did one yet. Let's do one. All right. All right. So with lower than expected Unemployment filings. Does the market rebound today? Yes or no? With lower than expected unemployment filings, does the market rebound today? I think I said fillings, didn't I? Hold on. Yeah, sorry. Here, I gotta redo this poll. Yep, I said filing. I said fillings. Hold on, let me fix this. Sorry, guys. All right. Let me end this. My bad, team. We're gonna redo this. Yeah, there we go. Just got to get rid of an L there. Market's still going back. Looks like a little mini bull flag. Yeah. So again, markets are up. Let's see if we hold. And again, guys, if you haven't already, check out Apex. If you want to day trade with me, we're going to get ready to day trade today. If you want to day trade with me, Apex is the place. Apex gives you a demo between 25K up to 300K. And if you pass their test, hit their profit target without hitting their max loss first, they fund you the same amount. The base one's 25K. That one's only 30 bucks a month. And if you lose, you're only out 30 bucks. Your risk is limited. If you pass it, you get 25K in funding, 90% split. And they've paid out millions and millions, hundreds of millions of dollars to their traders. They fund thousands of traders. It's a great way to learn how to day trade with limited risk in the futures market. Most day traders lose. Again, I think that's probably the same here. I think most day traders are going to lose. It's a lot cheaper to lose here than it is to put up thousands yourself and risk that. So just be smart, guys. Understand most day traders are going to lose and limit your risk. You know, I lost 5K when I first got started, so this is just a way to minimize that risk. All right, so we're going to day trade here. Again, put this up. If you want to check out Apex, here's the link, guys. Again, they're a sponsor. They pay me money. I'm biased. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. Hit the link. We're going to get ready to day trade today. Out of the way, and then I want to put Nvidia up. Nvidia has been bouncing back big on these numbers, surprisingly big. Like there's Tesla all the way back up to 194s. Look at Nvidia here. But Nvidia's coming back. Look at that rebound. Wow. Look at Nvidia. Nvidia's all the way back over $100 a share, guys. Wow. Here, let me put this up on the big screen. Look at Nvidia. Nvidia's going. It's dragging the market up big. Look at the NASDAQ here. And this is the futures market. So you can day trade the NASDAQ, which is the QQQ price action. You can day trade the SPY price action and the E-mini. Gold patterns are super similar to blue chips. Yeah, most day traders lose. Yeah, Palantir, I think, has been up a lot. They gapped up on a government deal that they announced this morning. Up to 27. I'm in PLTR as well, so this is nice. Man, look at Nvidia, guys. It's up. I'm going to start shorting, to be honest, though. Got 2 contracts short. We will add to this and try to short more. I know it's kind of a risky time. But 2 contracts. See if Nvidia starts to slow down. That's going to drag the market down, but yeah, we got to cut it. Nvidia starting to ramp. Look at Nvidia, guys. I'm going to let it settle down first and then short the exhaustion, I think. All right, so now we're going to try to short that exhaustion. We got 2 contracts initially. There's a little bit of exhaustion. We'll come back down a little bit. We took profit a little bit here. We'll add to this too. Take a little little bit more off there. Oh, look at that spike. Wow. What a candle. I gotta get out here though. So we got out. We made a little bit of money on that trade. We were down like 60, I think. And now, but man, what a candle. The job report was good. Yeah, it came in much lower than expected jobless claims, which is unemployment filings. Try to catch this top. It's a little tricky. There we go. 4 contracts. There we go. There it is. All right, we're out. So we just made about 150 bucks. I was waiting for that big correction here, but all right, so we're up about 45 on the day. Just trying to build up a cushion before the opening bell in about 50 minutes. This is a 50K funded account. You're definitely right yesterday about being bearish. Yeah, for sure. Still think we're going to come back down some here. 2 contracts. Half off. 1 contract left. There we go. All right, so we're out. So we're up about $62. Yeah, and we're coming down more. I mean, this was predictable, though, this pullback. Now we might bounce a little bit. But maybe not. I don't know. There's the bounce. Yep. Predictable. Honestly, predictable price action. This is the day trading price action that you want. Like, if I could say, hey, we're probably going to bounce real quick. It's just predictable. You got to look for exhaustion is what it is. But once the exhaustion gets like a big candle takes out the exhaustion, then it can kind of retrace and start moving back up. Really predictable pattern. Nvidia still charting up. Where's Apple at? I know Apple all the way up to 212s. Tesla still under 200s though. Tesla's down a lot. Well, balance is important too, right? Sammy says if you look at the 4-week average, the jobless claims are still going up, so I don't see how this is bullish. I mean, I think that your bias is bearish, but I think you have to understand more so that okay, we had big bearish action on Monday. We had a small bounce back Tuesday, and then we had a continuation in the bearish action yesterday, right? In that regard, the market is super weighted towards fear in the economy, right? Super weighted towards fear in the economy. What signals less fear short term in the economy? Less people filing for unemployment. More people working, spending, less people filing for unemployment. That's a good thing for the economy, regardless of what the 4-week average is. We're not looking at 4 weeks. We're looking at 1 week. See what that looks like. And the market's reacting heavily to that 1 week of data. The 4-week averages, we already know last month we had bad unemployment. We had 4.3%. That's what the market has been reacting to, as well as the yen situation. So I guess my point is, right now, it's more important to, like, the market's zooming in right now is what is important. Considering all the volatility we've had, this report is important in that regard. What's a tiny few got me in $100 after being wrong side in the red. As I read my chart wrong, I'm working on some new stuff, which so far 2 or 3 back testing. Hey, nice tiny. Nice work. Robinhood is up. Yeah. Is it correct that this job report does not mean anything from a rational standpoint? The issue is that people are now looking at whatever moves to have an excuse to invest. No, that's not true at all. I mean, jobless claims is a weekly filings of weekly unemployment filings, right? So this is a weekly report on unemployment filings is what it is. And so it is a shorter term look at unemployment, but it's still looking at unemployment in a market that massively fears a recession. And rate cuts have been talked about. Emergency rate cuts are talked about next week, right? So the market's zooming in. It's super important. Short term, long term, it doesn't mean that much. All things considered, it's going to get diluted out to the other big economic reports. But short term, it's important because of really, to put it in generalized terms, the volatility is what the volatility this week is why the market is looking at this data so much and highly reacting to it. And maybe it comes back down, maybe it doesn't. I don't know. That's what's going on. Emergency rate cut related to recession. Right. People are scared. They're worried about the economy turning. And so if people are worried about the economy turning, where are they going to look? They're going to look at unemployment filings, which is jobless claims, which is the report that just dropped. And if it came in good, signaling a stronger economy than expected, the market's going to react positively to it. That's pretty obvious. I told you guys before this report, if we came in super low, market was going to react well. The market wanted, we're back to good is good and bad is bad scenario. For the last few years, the market has wanted lower inflation. And so it's been a situation in which higher jobless claims has evoked a positive reaction in markets over the last few years because the market so heavily fears inflation. And if less people work, less people spend, and inflation goes down. But lately, especially over the last month or two, we've pivoted back. We're back to good is good. And that's what I told you guys before this report. I told you guys if jobless claims showed up super high, that's bad. If jobless claims showed up super low, like they did, that's good, right? And now we are reacting positively to that report and trending upward. We'll see if Nvidia holds the gains it's made. We've made, a little bit under $100 so far towards the open. Maybe not quite that. Just try to build up a cushion so we can trade a little bit more heavily at the opening bell. So again, stick around. Yeah, people get so I see so many people just really rigid in their direction. Like if they're bearish, anything, if they think the economy's failing, it's an election year. Emotions are high, right? An election year, news is telling you everything. It's the end of the world scenario. A lot of people get wrapped up in news and politics. And so they're saying it's the end of the world scenario. Other people are saying they're crazy and that everything's perfect and great. And the truth is somewhere in the middle. You just want to try to get not super wrapped up in all of it. Guys, we're chilling, waiting. Honestly, for 0.5 internet, we're doing pretty good. The internet's not bad for half a megabit. Hey, thank you, John Henry. Thanks, bro. You know what website publishes the jobless claims first? I'm not sure, but I know most reports. It's going to be faster to just use either my YouTube channel. I got a bunch of different sources. All right, so we are flushing down a little bit here. We're going to buy up this dip. Maybe add a little bit more to it too, but I think we're going to retrace at least a little bit back up if we can. There we go. 2 contracts. Flat. There we go. Out. All right, we got about $100 in profit, a little bit under, about $80 really, but just kind of chopping away, trying to build up a cushion of a couple $100. We can take larger risks than at the open. My day trades have been pretty accurate lately. They really have. Again, we got into a day trade on TOS earlier. We made money on it. We got into a couple day trades today. We made money on them. Yeah, the stream's running good. Honestly, I'm kind of surprised. Yeah, you can use a bunch of reports. I'll trade either direction as it gives me more ops. Yeah, I don't know what happened to Two-Way Trader. He was cool. I don't know what happened to him. I don't know, man. I try to work with so many people and it just doesn't work out for whatever reason. With him, he was like affiliated with my investing club as like a mod over there, and you know, he was doing his thing over there, and so I think we clashed a little bit versus like what my plan was for the channel versus like what he was wanting to do, and what I would cover, some stuff that he disagreed with, and so it's just how it goes. I think we got two contracts here. We'll add another piece here. Three contracts. Um, See if we pop back up. Oh, retracing all the way back up there. Weird. So we're long right now. I don't think I'm gonna add to this though. I think I'm gonna wait. I have a cushion, so I can play with the cushion, and it might give back all my profit. But yeah, we're gonna have to cut it. So we're down a little bit. We gave it back. We took a risk though. We're gonna try to add back. Three contracts. Took a little bit off again. Here's the retrace we wanted. This was the original retrace we wanted the whole time. We just didn't quite catch it the first time. I don't like that turnaround, so. All right, so we're up $40. We made it back. Like I'm really like I could scalp really well. And I saw the double bottom right there. That's what I wanted to target. The only risk with taking trades like that, like this right here, so you can kind of see like the double bottom level right here. The only risk is that like if we do break down, like if this double bottom right here doesn't hold, it'll dump quickly, and probably come back to like here. I would say support wise, like maybe here somewhere. But so that's the risk of it. But yeah, we're up $40. We'll see if we can continue to grind it up. You'll kind of see like I trade with my risk, right? So if I build up a cushion, I'll trade with that and I'll give it back if I need to, and then try to build up another small cushion and then give it back. Eventually it'll stick and I'll make we'll start to scale into more profits. So I'm just kind of waiting for this. Yeah, I'm not really one to talk negatively about any group. I don't really know them over there well enough to really say good or bad things about them. I just know like I'm not really about selling courses. I know most penny stocks are going to be very difficult to have consistency day trading, right? Like penny stocks are one of the most random, variance heavy sectors of trading that you can get involved with, right? So like but for whatever reason, ironically enough, like people preach about day trading penny stocks like it's easy or like it's the most consistent, and it's not. It's not at all. Look, there's the market starting to bounce back some. It's not at all. Like penny stocks are very random, very variance heavy. A lot of random like halts. You could be up $500 on the day, buy a small position in a penny stock, get unlucky, that penny stock gets halted, never resumes. You could lose everything you invested in it. Like you can get all these random halts at high of the days. They can be manipulated by people with big accounts, like fake level 2 shadow orders. Like there's all this sketchy stuff. But for whatever reason, like that's the sector that's like super marketed to traders. Like they can get rich if they just, and I get why traders want to believe it, because traders want to believe that you can take a small account and day trade small stocks, cheap stocks that they can afford and get rich that way. It's a really pleasant thought. Reality, I think, again, this is just my own personal opinion. The reality is, I don't think it's super easy to do. I think almost everybody's going to fail, and most people are just making money through marketing in that way, and I make money through marketing. I'm not, but again, I try to be honest while I do it, and I think that's the way. Anyways, 20-year bond punch pumping. Yeah, yeah, potentially Tony. And again, shorts are great. Um, shorts are great. The problem with it though is that like shorts are good, but the real issue is that most penny stocks you're not going to have shorts available. So like they might let you short them on paper, but locating those shorts in real life are a completely different thing. That's not going to be feasible. And if you can find shorts available, you're going to pay such high fees to do it. It's going to be really hard to profit. You to be honest, for me, what seems like the easiest way to make money shorting, and the one that I've considered the most, is short reports. As long as you got your licenses and regulations set, short reports seems like the way where you look for really bad companies that are overpriced. You create reports on why you think they're overpriced, and it has to be the truth. It can't be nonsense. It can't be fake. It can't be sensationalized. It has to be the truth, right? You build up a following if you're reliable in that regard, and you publish those reports and ride the downside from it if it's legal. I have to check the legal implications of it, but I think that's probably the best way to do it. That's the way I would prefer to do it. That's the closest to my style of trading, because there's a lot of stocks that I just don't like, and that I've called out not liking for years and years. That people are finally giving me a little bit of credit and being like, hey, you called that one. Peloton, Beyond Meat, you know, there's just a lot of stocks like that. Roku's one of them. I've been saying Roku's been weak for years, and it has. Uh, yeah, that's crazy part for sure. That's good though, man. Make the money. Uh, should I do a day trading stream today? I've been thinking about pivoting over to a day trading stream every day. The benefit is that like I don't know. We'll just chill. We'll go back to day trading streams next week, I think. Yeah, SPCE was one. I definitely shorted SPCE. Well, no, I didn't short SPCE. I'm sorry. I talked about SPCE about 3 years ago, talking about how it was never going to succeed. Like imagine, and again, my argument was this, right? SPCE, a space company from the Virgin Galactic guy, like he's never going to be able to monetize that company. Space industry is so freaking expensive, like ridiculously expensive. The fact that people are expecting my guy to monetize space in that way, and the shares used to be like $30+ a share. Of course they weren't going to succeed. It was massively overpriced, and again, it sold a lot of people. I called out space years and years ago, because again, it's just super unlikely that that company was ever going to make money. And now I don't even know what space is at. But again, maybe one day I'll start a short report. Yeah, now it's $5 a share. It used to be. This is post split too, so it used to be much higher. Look at the queue; it's up. John, what happened to the indicator? I'm still building it. Space's market cap is 100 million, but it is selling its seats at a million. Yeah, but the problem though, guy, is that the amount of customers that are actually interested in doing that are limited, you know? Um, and so that's the thing you got to understand. Like, it's also an incredibly risky business model, right? So, like, say something happens on one of those trips. You think anybody's going to get back on one of those things? Like, it's just too, and that's why, again, the space industry is so expensive. So expensive. Uh, yeah, I mean, I get it. You believe in it. It's all good. We could agree to disagree. I agree, but let's keep in mind that chartist analysis is better than fundamental analysis. I disagree completely. Technicals work, but if a fundamental report comes out simultaneously towards at the same time as a technical indicator signal, the fundamental report is going to massively change any type. Like, the fundamental indicator is going to be more influential than the technical, without question, except for maybe extension. Extension is relevant. Outside of extension, fundamental are going to influence the market much more. If CPI comes out at the same time, you could have the best crossover moving average signal in the world. If CPI drops at the same time and it shows up super high, market's going down, even if it's the best bullish signal ever, and so in that regard, fundamentals are much more influential. And you get these chartists that look at technicals and they think that technicals are causing everything. Like, you get people that are oblivious to economic reports. Like, I see a lot of people do this, where, like, an example is like, look, here's where jobless claims came out, right? Like, jobless claims showed up right here, right? Like, that's where jobless claims came out, right? A lot of people that are completely oblivious to jobless claims are going to act like their technical indicator signal somehow caused this run. Like, their signal caused this run, right? Like, and I've had people argue it. And it's like, it comes from a lack of understanding about economics and fundamental, like, movement. But again, you got some chartists that are like, technicals are everything. And again, that's not true either. The truth is somewhere in the middle. Technicals and fundamentals are important. But, you got to understand, like, what moves what. It also depends on AD, and it also depends on your how long you're holding positions, right? Like, short term, you're going to be a chartist, of course. Longer term, you're going to be more fundamental, and that's normal. Guy at Event says, ultimately, space is supposed to replace airplane travel. I know, like, listen, I can say all this stuff. I could say my son is supposed to be the karate master of the world, right? But that doesn't make him the karate master of the world. You know what I mean? Like, just because something wants to do something, I'm sure they do want to replace airplane travel. Imagine how many infrastructure changes are going to be needed for it to actually have any type of influence over airplane travel. It's not going to make airplane travel, it's not going to influence it at all right now. The infrastructure is not there. And if it eventually does, it's going to take decades to do so, right? And so that's why space is a terrible stock. Like, it just doesn't have the margins. The space industry is expensive. Nobody really wants to fly with the guy from Virgin Mobile. And even if they do replace airline travel eventually, it's going to be decades from now before they see any type of bottom line positive net change from it. And so, I get people might be heavily invested into it, and I get it. People are super interested in, like, SPCE. It's just not the stock, in my opinion. It's one of those stocks that talked a lot of investors into spending their money on it and then lost the money because they had big dreams, but not enough infrastructure and not enough of not good enough execution to accomplish it. But again, maybe I'm wrong. There are some parts of it that I can admit I don't understand or know about. And so, again, maybe I'm wrong. All right, we're mostly sideways heading into the opening bell chat. We are mostly sideways, neutral, flat, not doing much. All right, guys, we are going to be going to our day trading stream here, guys. We are going to be going to our day trading stream today. All right, let's get ready. All right, so don't go anywhere. As soon as we close the stream out, it should immediately bring you to our new day trading stream that we're going to be doing. We're just trying to build that day trading audience up, chat. So yeah, so stick around. We're going to it right now. Yeah, so again, you won't have to go anywhere as soon as we close it down. Yep. Get this out of the way. Yeah. All right, so again, don't go anywhere. As soon as we close the stream, it should immediately bring you to our day trading stream. So it should redirect you straight to our day trading stream. Don't go anywhere. Again, as soon as it brings you there, as soon as you go there, it's going to bring you there. If it doesn't, for whatever reason, bring you to our day trading stream, chat. Whatever reason, go to this link right here. We'll put it up in chat. And that way, we're going to have our charts up big. There's the day trading stream. We're going to pivot over there now. Again, don't go anywhere. As soon as we go there, it's bringing you to our day trading stream, guys. So again, if it doesn't, you can go to that link and catch it, and I'll see you guys over there. Let's see what this looks like today. This day trade. All right, guys. We're going over there now. There's the link in chat.